My name is Daniel Globerson. I'm the head of open banking at Natwest Group. Natwest Group, we represent many brands that many people are familiar with. Obviously, Natwest, Royal Bank of Scotland, Coutts, Ulster, and many others across Europe, and with a few outposts around the world as well. And for us, open banking has been a great journey from both a regulatory perspective, from a customer engagement perspective, and we're really thrilled to be part of the conversation on wealth and pensions. The open concept is incredibly important for us, and we've had some experience as Francesco, as Dan and Ross have mentioned, as have Sam in the UK, with the benefits of open banking in terms of sharing current account and card data, and how that's beginning to help the public and our customers understand the financial picture, understand how to create savings, understand how to get better deals. And I think the whole open concept is one that drives, firstly, innovation, and secondly, competition. And so from that perspective, I think there's a massive opportunity for innovation followed by competition in the pension sector. We've had some experts here just now talk a little bit about the challenges of knowing where one's pension is located, and even from there, understanding what the performance of the pension is. I think wealth is probably a little bit different than pensions, maybe in my mind, at least, in that the pensions opportunity, I think, touches the vast majority of the public and of our customer base. In terms of wealth, I think historically we think of wealth as a more limited customer segment in some cases in the world of finance. But actually, if we were to flip that on its side, I think through digitization and innovation, we could bring higher end wealth services to the masses, so that wealth management would be an opportunity for far more people. And by allowing our customers to initiate transfers of funds between providers, I think that can only end up in with benefits for consumers far and wide. Even in scenarios where financial products and customer channels are fully digital, for instance, current accounts as we've evolved over the years, it's still quite an undertaking to agree to a standard, apply a standard, and invest in the infrastructure required to externalize all these data, information, payments, and all the security around it. It's no small undertaking, even for the large banks who have fully digital journeys. And getting back to your point, it's even bigger undertaking if we're starting from a scenario where some providers, other than the 12, for instance, some subset of those providers may not have a full digital journey, may even not have a partial digital journey. And in the worst cases, I think we've had a few examples of where there's physical storage of documents, which takes us into a little bit into the Stone Age. I do not think that prevents us from setting up a standard. Setting up standards doesn't require all participants; it requires most participants, and we learned that from open banking, where the 9 large banks, with the support of our Competition and Markets Authority, strongly suggested that we set up a standard, and that standard's been adopted by a fair number of smaller institutions as well. So I think it's perfectly feasible to set up a standard. I probably do wonder a little bit if what the right thing to do is for those who hold pensions with administrators or providers that don't have a digital capability. And inevitably, moving away from the standard, do we end up creating islands of capability where if you're one of the haves and you happen to have a pension with a big provider that's applied a standard, that's willingly or under regulatory direction open this up, that you can really move around and do some great things. However, if you're off-piste, I'll say, and you're with the other 20% of the market, which in all likelihood is hundreds and hundreds, if not thousands of administrators, if that means one doesn't have access to that, that seems a bit unfair, really. And potentially, without that level of transparency, it might be that 20% have the most to gain. And so I think that's something that we need to recognize, is that it's going to be a step harder than open banking, where we're effectively externalizing what's already digital, and into a place that we're going to have to find a way to digitize those who aren't. Conceptually, that could lead to some industry consolidation and other opportunities, which might also be great for those holding pensions. another great question. So, and I suppose my initial response just on the question would be that I think open banking, we're at the very beginning rather than the end of the innovation and competition that we're driving with it. So I think that story kind of remains to be told. I think we've seen great activity. We've seen increasing utilization, millions of customers across banks taking advantage of the opportunities, but we're still at in the initial phases of that, even on things like open banking payments. We're right at the very, very beginning. For open pensions, I mean, in the context of opening up their APIs, we still are challenged with the fact that even the largest providers haven't tended to build their infrastructure, their technical architecture around externalizing services and APIs. Ordinarily, if you see a new digital provider come in, they tend to be pretty good that way. The modern world of microservices and APIs is very natural. But even for some of the largest providers of pension or wealth, actually can be quite a foreign concept. So I think that similar to open banking, it's twofold. One, a very, very strong encouragement and potentially a mandate by the requisite regulators, whether it be competition regulators or other consumer regulators, followed by significant investment by the providers to actually, for those that don't have modern infrastructure, to put that in place. And it's not a small investment. It's not easy. It's certainly worth doing. I think just providing a little context from the Natwest Group perspective, we have always held near and dear that we wanted to be an API-enabled bank, but like other things, there's always priorities, and open banking actually provided us an opportunity to fund and invest in modernizing how we deliver our own services. So we're now sitting at the end of the APIs we've developed for open banking, but I think it's going to take a pretty significant push to in the pension and wealth industry to have those institutions make similar investments. So that's my view.